Well, this talk is about risk management and risk management in the light of the current financial crisis. So there's a lot of people in the risk management profession who have some embarrassment about the failures of some of their models. But equally, that gives us a great opportunity to look at what's happened and to understand what we can do, what we can't do, and how to make a better job of it into the future. The talk is structured really into four main sections. So in the first part, we take a look at how risk measures are constructed and what the problems are and why sometimes they go wrong. That leads into the main section, looking at the best way to do the various kinds of risk measurement which are important. So in particular, we focus on value at risk measures. So there's a measure of how much you can lose with some probability over some horizon. We look at stress testing, and finally we look at the measurement of performance and feedback of that into creating forecasts. The third section is to do with techniques which are of rather less use. And these are often very technical, so it's not such a loss that if they're not so valuable as first thought. So among these are extreme value theory, lower tail risk, and also, perhaps more surprisingly, the use of copulars. Finally, we look ahead longer term. So longer term, economists are beginning to question whether they have their priorities right, even in terms of looking at problems which are simple to solve maybe, but which aren't really impinging on the realities. The first of these is to understand financial networks. Clearly, there are a lot of interactions and transactions among banks, and the systemic failure is to do with these interactions and the networks. So certainly the Bank of England has done a certain amount of work already and is continuing to work in this area. Other academics, for example at LSE, are also working on financial networks. Another aspect of the crisis, which is extremely important, is to do with the kind of feedback loops in the financial market. To conclude, there's a lot that we can do. We've learned some really important lessons from the crisis, and we've reviewed them. There's also some really exciting work in progress, which may take quite a lot longer to come to fruition. But in the end, our risk measurement will always have some fallibility to it, and we should not expect too much from this activity.